for tomorrow's light. The sky is glowing here tonight. Every second softly calls, even echoes through these walls. There's a rhythm in your chest telling you this moment's blessed. You don't need a perfect sign, you don't need to read the lines. Just breathe it in and let it show. This is where you start to grow. You don't need to understand it all, just keep moving when you fall. Every shadow fades with time, every mountain starts to climb. There's a spark beneath your skin, that's where all new roads begin. Feel the pulse beneath your feet, hear the quiet in the beat. Something greater pulling through. All of it begins with you. Carried by a fearless love, right here, right now. Hearts awake, every breath a chance to take. Right here, right now. It's clear somehow. Forever starts right here, right now.
All right, legends, let's do some technical analysis. Here on the price of Bitcoin, what can we expect today? Like I said, guys, you know, when I do a live stream here in the mornings, there's anything that can happen during the day, okay? Because we spoke about upwards momentum yesterday, and did we get an explosion? But I still got into a short, because based on how price action develops, I can change my tune, I can change my analysis. I'm allowed to do that as a technical trader because you never know what price is going to do next. And yesterday, let me just put the music ever so slightly in the background. Yesterday, okay, well, this happened. Big explosion here to the upside. And I gave the price action a little bit of room to breathe. Okay, I was also, there was a short that I got stopped out of. Yeah, got stopped out of a short, and I'll explain to everyone why I got out of that stopped out of that short. But then I took another short, ding, took nice little profit here to the downside, and okay, if price forms a lower high here, then I will just ride the momentum to the downside. But there's also a long that I'm looking for, but there's also another short that I'm looking for, and that's what I want to discuss in today's live stream. And I think that's the benefit of being inside of the community, because based on how price action develops, I will look for next trading opportunity. Okay, I also want to put a disclaimer out there, okay, that if you are inside of the community, and I did say this yesterday, I just want to reinforce what I said yesterday in the community as well. If you are inside of the community, you do not have to take the trades that I am taking, because I do share the trades that I'm taking, and I do get stopped out. Okay, but sometimes I feel like, okay, it's worth an attempt, and I'm prepared to lose a little bit of money with this trade. This short that I attempted, I think it was a year. Okay, I lost 0.6% of my portfolio with that stop loss. And I made everything back plus profits with the short that I took here on top. It's my style of trading. I do get stopped out, but what keeps me profitable as a trader is that I manage my risk like a king. If your analysis does not align with my analysis, don't take the trade. Stick to your analysis. Share it inside of the community so we can see what you are seeing. Okay, just wanted to reinforce what I said yesterday in the community. I'm only sharing with you how I approach the markets. You could have completely different analysis, and you know, and there will be times, not if, there will be times where you don't agree with what I am doing. For example, stick to your plan. Okay, it's your trading account, it's your money. Okay, I'm trading the way that I am approaching the markets. Okay, that's a little bit of that, my little rant for the day. So guys, yes, I did jump into a short yesterday. Okay, and I'll explain to everyone why I jumped into that short. I think Andy also highlighted this short yesterday in his live stream. I couldn't stay for the whole of Andy's live stream last night, but he also showed everyone why. Okay, it's most important. Why did I jump into this short? Because I did highlight this inside of the community as well, as to say that, well, there was a nice little level that I was keeping an eye on. Okay, so guys, I have no problem getting stopped out of a trade and immediately after that jumping into another trade. That's my style of trading. I have a very persistent style of trading. I have received messages in the past from people saying, how can you get stopped out and 2 minutes later jump into another trade? Because my analysis changes and my plan changes. Okay, I'm a reactionary trader, so based on how price action develops, I always have different plans. I get stopped out of one, I jump into the next trade. It's my style of trading. Some people, and that I think that's why it's also important to know your style of trading. Some people, and this was the case with me in the beginning when I started out, when I get stopped out of a trade, I had to go and deal with that emotion. I couldn't just simply jump into another trade. I had to go and process that. But now, you know, when it's rinse and repeat, I've been doing this for years. I've been, you know, doing thousands and thousands of trades. For me, it's like, well, I'm not, you know, I see the opportunity. It's a great opportunity. I'm going to jump in. Okay. Because I think what's most important is I didn't blow a hole in my account. I lost 0.6% with the stoppage from yesterday. That's it. Okay. If you don't agree with my analysis, don't take the trade. It's as simple as that. Right, guys, so now we need to analyze what is happening over here. So the first structure that I want to do a little bit of a recap of what we spoke about yesterday, and then obviously what is happening here more locally, because I can go through a couple of scenarios here on the larger time frame, which I will, okay, but it is the local structure that determines the direction. Okay, I like to say that we can go crazy and analyze some Elliott wave scenarios in terms of what could still play out over here. But it's this move that is the most important. That's how I like to trade. It is now this move, okay, that's for me the most important, because that provides me with my shorting and longing opportunities. Okay, so now let's get, I'm not sure if I should do the higher time frame first. Let's first focus on a little bit of higher time frame analysis here on the 4-hour, 2-hour, 1-hour time frame. Just go through some of the scenarios, and then I'm going to jump into this. Okay, we're going to jump into that. right? And more specifically, we're going to jump into that move that happened yesterday, right? I know people are saying, okay, and I see this everywhere, not just here on this channel, the market is manipulated. Why does it even matter to day trade? Well, I can tell you guys now, technicals do matter, because it's technicals that's kept me profitable, but more importantly, risk management, because even when I'm wrong, I lose very little, or most often, according to my trading journal, most often 80% of the time when I'm wrong, I still make money. I still get stopped out with profits. Okay, so it's risk management that keeps me in the game. Right, guys, you all know that this is a channel where I love to do education, teaching people how to fish, how to practice good risk management, because there's not a lot of channels out there that does that. Okay, so when I started this channel together with Andy, joining forces here, we educate. Okay, if you want setups and you want signals and you want to be spoon-fed, this is where you long, this is where you put, it's not the channel for you. I would rather teach you why I'm doing it. So I will highlight areas of interest, and I will let the community know when I do enter a trade and I'm able to do so, which I have done yesterday. Okay, but it's still up to you to know, but what's more important to me is to explain to you why. How did I get to that conclusion? Why am I shorting? Why am I longing? Okay. Right, now let's go through a couple of scenarios, and the first one I want to go through is, well, I think Andy also spoke about this one yesterday, and it's also something that I have been highlighting for the last couple of weeks. They never carry high probability, but so far it actually looks pretty sexy, because sometimes low probable scenarios do play out. But this scenario has a twofold answer, okay, that I want to discuss today. And I'm sure most of you that's been following me for the last couple of weeks, you know exactly I've been discussing this scenario, okay, where price has formed a 1, a 2, a 3, a 4, and I said the fifth wave should not tap the invalidation. And I want to see price reject at the 0.786, well, which it did. Okay, in this scenario, if you have your 1, 2, 3, 4, 5, and your fifth wave, okay, all the structures inside are 3-wave structures, 3-wave structure in 1, 3-wave structure in 2, 3-wave structure in 3, 3-wave structure in 4, and you know WXY, which is basically an ABC inside of your fifth wave. You should not tap the invalidation, which it did not, so this scenario is still valid. Okay, now what I want to discuss is to say that, well, there's now two things that can happen with this scenario. Obviously, okay, a scenario always has two sides to it. The most bullish scenario, and I can actually take this trend away, don't need that trend, okay, is that you get a leading diagonal and you get an ending diagonal. Unfortunately for the bulls, an ending diagonal takes higher priority than a leading diagonal, especially on the higher time frames. Okay, so the difference between the two is a leading diagonal, which carries the lowest probability, okay, is this is an impulsive structure. You want price to form a higher low, not take the low, okay, you form a higher low and you get continuation to the upside. This is the one that everyone is hoping for. This is the one that everyone is like, okay, maybe, maybe we're going to get a low probable scenario that's going to play out here. Yes, it can happen, guys. But the one that carries the highest probability from a textbook perspective, from a backtesting perspective, okay? So when you backtest and you find all the leading and ending diagonals that has happened in the past, there's a much higher percentage geared towards an ending diagonal. An ending diagonal is, the rules are simple. Each wave has to have 3 waves inside of it, which it does. And after you have 5 waves to the upside, you fall and you claim the low. That's an ending diagonal. It ends, so it ended over here. And price now continues to the downside. From a diagonal, contracting diagonal perspective, they do carry higher probability. Now, it's this move that's going to give us the answers that we need to see whether it wants to continue and take the low, or whether this is going to form a corrective structure, make a higher low, and continue to the upside. And this is what, as a technical trader, I need to figure out. Okay, so I know already that a leading or an ending diagonal takes higher priority. And now also we have a 5-wave structure to the downside. You have a 1, 2, 3, 4, 5. However you want to count it. 1, 2, 3, 3, 4, 5. Okay, you can count an impulse to the downside, which means that this can be a corrective structure for continuation. 1, 2, 3, 4, 5. Can you guys see how dangerous this can become? When you have a leading structure to the downside, which is a 5-wave structure, price can correct to the upside, make a lower high, and continue momentum to the downside. So for the moment, the bears are in control, even with this pump that we had yesterday here to the upside, because probabilities favor an ending diagonal based on this scenario. Okay, but I mean, guys, it doesn't impact my day trading. I'm just trading the local structures. Okay, I'm about to get stopped out of this short, but as you can see, yes, you guys should be able to see that I've already taken most of the profits. If it wants to fall and not take the high, then I'll make more profits. If I get stopped out, I get stopped out with profits. Okay, it's my style of trading. I always pay myself here to the downside. Yesterday when I highlighted this trade inside of the community, you know, I told them I took profits there, I took profits there, I took profits here at the bottom, but you guys can see I'm in profits. So, you know, I've made my money. And that's what's important to me. Did you make money? You guys know I like to help on that fact. Okay, whether you're right or wrong, I don't actually care if price does this or if price does that. Did you make money? Okay, I'm not going to hop on that one again, hopefully during this live stream. But remember to smash up that like button if you do enjoy the content, the education. Welcome to all the community members that are here inside of the live stream. I have posted a couple of scenarios this morning already that I'm keeping an eye on here on the smaller time frames, but I'm sure Andy's going to jump in with a couple of more scenarios, okay, because myself and Andy do take turns inside of the community. Okay, today is Andy's day, yesterday was my day, but we also jump in to help each other out if we see that maybe Andy saw something that I didn't see, or vice versa, whatever the case might be. But this scenario looks really, really interesting because it's just, it just makes sense. It balances. There's no mistakes inside of this scenario. Okay, so this could definitely be the end of something. The end. You did not tap the invalidation, and now you want to build impulsive structures to the downside. And now we do have an impulsive structure to the downside. We do. Okay, the price has formed an impulsive structure to the downside. So it's dangerous for the bulls at the moment, and the bulls they have a lot of work cut out for them. Okay, for price to continue here to the upside, well, I want to see a 5-wave move here, and I'm going to discuss more locally what I want, what I would like to see to give more probability to the bulls. So you guys can see that I use price action to determine probabilities. For the moment, the bears are still in control based on the price action that is currently available. And as price develops, I will very quickly change my tune. Okay. So now, that is one scenario. Let's just see if there's something else I wanted to discuss here on the higher time frame. Yes, you could have your WXY. I don't particularly like this scenario, but it has the exact same outcome. It doesn't matter because you have to, for this Y wave, you have to count this move as an ABC. A, B, C. That little move there tapped an invalidation for a B flat. How can I put this? It's the 1.618, and I think I do actually have that in here. I just want to check. This is my problem. When I go here onto the 1 hour time frame, okay, guys, this is purely from an educational perspective, okay, is that when you want to finish up a Y wave, okay, it has to be a 3-wave structure. And it has to be an ABC, a zigzag. And you can see you have an A, which is fine. You have a B, but you have to form an A, B, C inside of a B. You have to have a 3-wave structure inside of the B, and that little pivot tapped the 1.618. which is not a true invalidation, but it is extremely rare for a B wave to tap the 1.618. That, your 1.382 is usually your maximum target. But nonetheless, whether you argue about it, what is it an ABC or if it's a WXY, it doesn't really matter, because based on this structure that I've shown you, we're basically arguing about the internal count. But whether this is the 1, 2, 3, 4, 5 that I've just shown, or whether this is a WXY that came to an end tapping the 0.786, it doesn't matter. It's the end of something and now the beginning of something new. Okay, so for those of you arguing amongst yourself, because I know there are eliticians that are arguing about the structure, it doesn't matter. It really doesn't matter. Whether this is an ending diagonal or a leading diagonal or a WXY that came to an end with a B wave that is now tapped the 1.618 that doesn't look great, you can still count it as the end of something. And now this is the beginning of something new. Doesn't matter how you count it. Okay, right. Just want to undo that one. I didn't want to delete that trend. So just wanted to quickly discuss that. It does count better for me as a WXY. And this is why I'm favoring this scenario. Can you guys see why I'm favoring this scenario? Because you cannot have a WXY that ends in a Y wave. Okay, that Y that I had there with this scenario. Okay, this is why I'm favoring a leading diagonal or an ending diagonal, because of this internal count. So it's just a little bit of technicalities. Okay, doesn't really matter at the end of the day. Right, the only thing that matters is that if this is a contracting diagonal, it has the chance to make a higher low and continue to the upside. Where if this is a WXY, can you guys see this? Okay, if this is a WXY, well then it's the end and we're going to take the $60,000 low. That's the difference. So for the leading or the contracting diagonal actually looks better than the WXY because of that, purely because of that. So now I think you guys can see how technical it can get. Now so if you're debating with yourself which scenario takes higher probability, I would say for myself, if I look at this one versus the contracting, I would prefer the contracting because internally the WXY makes more sense. You basically have your W, okay? Your W here to the upside, you have your X in a triangle, and then you have an ABC to finish up your Y wave. Perfectly fine. It just technically it looks better. Right. Yeah, guys, then we can discuss. Did you guys remember this scenario that we discussed a couple of weeks ago? Well, very often, actually, where I said it's just not looking great. Now you guys can see, okay, it's not looking great. It's now even looking worse for this scenario. Okay, so probabilities do play out. I told everyone it's a damn ugly scenario. Okay, look at the small impulse and a long correction. Small impulse, long correction. Not an invalidation, but it impacts the probabilities. Okay, and after this little 2, you wanted to see acceleration here to the upside to complete your 3, your 4, and your 5. And now we have this mess over here. So now it's throwing another spanner in the works, and it's even making it worse. It's now even worse than it used to look. So I cannot give the scenario any high probability. It has not been invalidated. Okay, and let me explain. Because maybe this is another 1, 2. But now you're sitting with an expanding structure. 1, 2, 3, 4, 5. Expanding structures are so incredibly rare. So you have something that doesn't look right. You have something that doesn't look right. And now you sit with an expanding structure as well. So it's just, there's a lot of things about the structure that just doesn't look right. So for price to get here carries the lowest probability. I'm still talking about it because it hasn't been invalidated. I'm just trying to, from a technical perspective, show you the probabilities. Okay, so for an impulse, for another 1, 2, in an expanding structure, which is incredibly rare, For price to start accelerating here to the upside, smashing $85,000-$90,000 area, you know, that the zone that everyone was talking about last week and the week before, we're going to $85,000. It actually carries low probability. Okay, and now that price is here, people have now changed their tune. Okay, we're going to 85, we're going to 85, oh crap, 85, what happened? Okay, we're going to 85, we're going to 80, oh crap, what happened? We took the low. Okay, so I'm not saying, guys, that, ladies and gentlemen, I'm not saying that this scenario cannot play out. I'm just technically showing you the problems with this scenario. Make no mistake, I will be looking for a short if price gets there. Okay, I will be looking for a short if price gets there. I will be looking for a long with the retracement. So sometimes when a low probability scenario plays out, I can still trade it. Okay, but the price action has to show me that it is playing out. And for the moment, it's just not looking great. Okay, until proven otherwise. Right, now I want to talk about the spanner. I like to now call this, why is this contracting not expanding diagonal? Are you talking about, sorry guys, I'm just reading through some, why this is contracting not expanding diagonal? Because, where's that? Contracting, because it's contracting. Okay, I'm not sure if you're talking about this one. It's contracting. So if you draw your lines, okay, it contracts. And a contracting diagonal by far is more common than an expanding. Expanding is, let's say the fourth wave came down here, and then it went up for the fifth wave. Now you have an expanding structure, a trumpet, if you will. They are incredibly rare. You do, however, you know, one could argue that you see them on the smaller time frames because there's more noise inside of the smaller time frames. But when you start going to 1 hour, 4 hour daily time frames, to even consider an expanding structure is incredibly rare. Okay, so the reason it's contracting is because 2 and 4 and 1 and 3 is contracting. That's why I'm considering that scenario. Okay, and they carry much higher probability than an expanding structure. But now if you count this, like I said, as another 1, 2 inside of this structure, you have to now count this as another 1, 2. In order to get there, you have to count this as another 1, 2. So you have a 1, 2, 1, 2, and now another 1, 2. Now, in there, you have an expanding structure, which is incredibly rare. Because the only way you can count a 5-wave structure inside of this move is with an expanding structure. And you guys can see when I connect the lines over here, okay, it's expanding. Incredibly rare. So I'm not saying it can't happen. It's just incredibly rare to see this. So if I had to place my bets, I'm not going to bet on something that almost never plays out. I'm going to rather try and place my bets on something that plays out more often, 75% of the time, 80% of the time. I'm not going to place my bet on something that plays out 5 or 1% of the time. Can it play out? Of course, but there's still a percentage linked to it, but it's just low probability at the end of the day. Okay, so now let's just clean up the noise over here, take this out the way. If you do enjoy the content, remember to smash up the like button. Okay. Have you noticed the lower time frame session setup that's happening? Yes, we're going to jump into the lower time frames in a moment. I just want to get the larger time frames out the way. Okay. Hello, legends. Mr. A Trader in the house. Let me just quickly say hi to everyone here in the community. How long do you wait to set your stop in profits? It's not when, it's how price develops. Sometimes it's 5 minutes, sometimes it can be 3 hours. So it's not when, it's how price develops. For me, at least. Okay, hi Deviled Arena, great to see you here in the live stream. Mr. Nico, tap the like for the TA. Did you make money? Yes, did you make money? If we reclaim value area high around 71 with power, yes, and I'm going to discuss that scenario, okay? How does an ending diagonal fit in the overall downtrend structure? I'm going to have to stick around on the higher time frame analysis. I just want to finish up the local stuff over here. Okay, maybe I'll do a stream where we can focus on the daily time frame and how that fits in, right? Why this can't be bigger WXY to the upside from 60k. Okay, yeah, you guys, and this is the problem now. You can spend a lot of time, okay, on these scenarios. What can still happen? What can still play out? Okay, but for me, from a day trading perspective, okay, I am the most interested in this structure, and more specifically that structure, because that's where the trading opportunities lie. So we can spend hours here on the live stream saying that, you know, A, B, C, W, X, Y, how did it happen? Is it ending? Is it contract? We can spend a lot of time analyzing this from an Elliott wave perspective, but it doesn't help me to trade because it's the local structure that gives me the opportunities, which then tells me it actually doesn't matter what happened here, what's happening here from a larger time frame perspective. I want to get into shorts, I want to get into longs, shorts, I want to get into the longs and shorts, make money like I did over here, guys. I'm about to get stopped out with profits. It's the local structure that gives me the opportunity that I need to trade from a day trading perspective. From a swing trading perspective, this is where the larger time frame stories becomes a little bit more interesting. Okay. This channel is focused more on day trading. You know, we want to see what's happening on the 15-minute time frame. We want to see where's those next trading opportunities. Where am I? You know, I can only tell you how I approach the markets. Where's the next shorting opportunity? Where's the next longing opportunity, for example? Okay, I think that's what's most interesting for me, or for most people here on the live stream, is those local scenarios from a day trading perspective. Okay. Which then basically means you don't care what is formed over here. You don't care. It's nice to know so you can get a little bit of directional bias, okay? But you just want to trade the structure in front of you. So it really depends on what hat you are wearing. If you are a swing trader and you only play swing trades, you're going to have to be very patient for the structure to show you which direction it wants to go. Okay, you're going to have your longing zones. You're going to have there was a nice little short anchored VWAP. Do you guys remember that short? Fell here to the downside. I closed most of my position here to the downside, and then I got stopped out. I took this long, I took this short, but those are the type of trades for me from a day trading perspective that can turn into a swing trade. Okay, unfortunately, during all of this, okay, not the recent move up, during all of that, I took a break from the charts because I know that there's always another trade around the corner. Okay. Now, remember to smash up that like button, okay? If you haven't done so already, Andy is totally swing. Yeah, Andy is leaning more towards the swing trading side. So he's watching this structure. I can tell you now, Andy is watching this structure with very keen eyes because you have a 1, 2, 3, 4, 5. You could form a corrective structure and fall. Okay, so from a swing trading perspective, this structure is very interesting, but you need price to make a lower high over here. And it's the next move here to the upside that will give us some clues from a swing trading perspective. So yeah, I suppose you can combine some of your day trading into swing trading, but what I have found, it's usually for me a day trade that turns into a swing trade because I longed over here. Okay, when price came here, fell here to the downside, I longed here. But make no mistake, I took profits here because that was the 0.382 from a Fibonacci perspective. I also entered a short. Okay, so now I'm hedged. I don't care, you know, price can now do that or price can do that. I'm making money both ways. I already took profits from both of the trades. So if price had to fall here to the downside, well, the short would have turned into a swing trade. If price continued here to the upside with, you know, without stopping me out, for example, I would have had a swing trade to the upside. It really depends on how you want to approach the market. Okay, so now let's go on to the 15-minute time frame and let's discuss this little structure, okay? Because this is now where the meat and potatoes are, like Andy likes to say. The meat and potatoes, how are we going to get into those day trading opportunities, okay? So, I mean, the first momentum that I was tracking was this little momentum. This was a long that I highlighted in the community. I did not take it. I'm not going to go through all the details again. Okay. And then yesterday in the live stream, I have to go into the 5-minute for this one. Okay. There was another little trend. I think it was actually the 1 minute. And I told everyone I do not have to take every trading opportunity. But I mean, it was an opportunity nonetheless. It was this little breakout. Okay. I think it was this one, if I remember correctly. I told everyone I'm not going to take the trade. I'm not interested in the trade, but it played out. Okay, from a risk management perspective, it looked good. You closed the candles above. You tapped the 0.618. Beautiful. And sometimes I'll skip a trade because I didn't get into the level where I wanted to get into. If I got in there, I would have taken the trade. I didn't like the risk to reward from the highs to the stop loss. I personally did not like the risk to reward. So I can make a choice as a technical trader. Take it or don't. Or maybe take it and going with less capital. I decided not to take the trade. Yes, it played out. I mean, it absolutely flew here to the upside. So be it. Okay, so be it. I know there's always another trade around the corner. Right, so guys, let's just get out of the 1 minute time frame, because I mean that's a little bit crazy, right? To spend some time on the 1 minute time frame. Okay, so just want to do a little bit of a recap. So now the question is, okay, this structure does look like a 5-wave move to the downside. You could also count this as a 1, 2, 3, 4, 5, which ended over here. But the point is, you have a 5-wave move or you have a 5-wave move. This could be the start of the correction if 5 ended over here, or the correction could be coming to an end if 5 ended over here, and you basically formed an ABC flat. Okay, so if this is your end, and let's paint it out very nicely over here so everyone can follow. If this is the end, let's just do it there and there and there. If that is the end, you could have formed your ABC over here. You have your A, your B, and your C that ended over here. Okay. It is perfectly fine to make one more high because the structure does allow for one more high. So C is either in or it's going to make one more high. And this is now where my trading opportunity starts revealing itself. Okay. If this is the end and you can even move A over there. It doesn't really matter, guys. It's a 3-wave structure. I'm not going to argue about the internal counts. Whether you put A here, whether you put it there, it doesn't really matter. It's a damn 3-wave structure. Okay. But if the impulse ended over here, and this is an ABC flat that is correcting the impulse, okay, the high is either in or it's going to make one more high. Because this local structure does allow for one more high, which now brings me to a shorting opportunity. So I'm already in a short. Can you guys see why I took the short? And also why I took that short? Because I know that this correction can come to an end. I'm more interested in shorts because I know there was a lot of people in the community that sent me DMs yesterday to say, Dewald, why did you play that short that you got stopped out of? Because it's for me more interesting to look for shorts because, okay, it doesn't matter how I count the structure, it can turn around at any moment. There was bearish CVD, there was divergence as well, if I'm not mistaken. Okay, if I look at this, between those two highs, okay, that we then formed, there was also bearish divergence. So I was more interested in shorts. Also, price kept on pushing up here on decreasing volume, which I pointed out to the community yesterday after I got stopped out. But I started getting interested in shorts because I know that the C is very close to be done. Okay. And I can have multiple attempts like this one over here. If C is done and this is the high and it falls, well, I'm already in the trade. I'm already positioned. If I'm wrong, I get stopped out. I get stopped out with profits. That's why I'm saying, guys, it actually doesn't matter if you're right or wrong. If you manage your risk in your trade properly, you know, that's what it's about for me as a day trader. Okay, I often get into a trade, like yesterday, I was wrong with this trade. Okay, and I did lose capital with this trade, but I lost 0.6%. I don't sweat the small stuff, guys. I entered a trade over here, a short, because I was like, okay, this could be an end. Okay, it could be an end over here. And we had the daily levels. I think we had the weekly levels. If I just switch on the levels over here. Did I delete them? I think I might have deleted them. Because yesterday in the stream, yes, there was another level over here, okay? We got the rejection down. And this looked like it was the back test. So you could get continuation to the downside. So I entered this position. I told everyone it's a scalp. For me, it's a scalp. This is not a swing trade for me. This is a scalp because you could A, B, C and go up again. So I was just looking to take advantage of a small little move. Okay, it was nothing significant, but then I can leave some of the position open if it wants to continue to the downside. But I was ready to take most of my profits at the low. It did not play out. I got stopped out with a 0.6% loss. I can't win them all, okay, but it's about how little I lose when I'm wrong. Okay, so now let's get back here onto the 15-minute time frame. And now, based on the scenario that I'm discussing now, this is now where it becomes interesting because I can count a 1, 2, and another 1, 2. There's a double 1, 2. So this could be your 1, 2, 3, 4, 5 for that structure. And now this 1, 2 still needs another 4, 5. So you need a 1, 2, 3, 4, 5. And this is what I'm saying. This C can move there or it's in. But I'm looking for shorts. So the easiest short that I can identify from a confluence perspective is it's either going to double top. Okay, so if price continues to the upside and it rejects, that is where I'm looking for the short. I'm looking for the rejection. And I'm looking for price to trade back below this high. That's what I'm looking for. Because it might not get to the weekly level. It might not get up here. But if it does, I will treat this line as a swing failure. Because it could also be a 1, 2, 3, 4, 5. A little bit higher. It's a better level for me to trade. So I actually want price to get to the weekly level because I know how to observe the reaction to place a successful short in that zone. But I also realize that it could literally sweep the highs and reject. So I will keep the community up to date if I do jump into the short, if I do get stopped out over here. Okay. So that is the trading scenario that I'm currently watching, is to say that, well, this could be the end or it makes one more high. Preferably it goes and it eats up the weekly level that I'm keeping an eye on. Also this little pivot, okay, I like to look at price action as well. Now that looks very interesting to go and sweep the liquidity above that high. So let's mark out that level, take a magnet. Okay, let me snap it on there. There we go. So what I will be looking at is if price does not get here, I will be looking at a swing from that high. Grab the liquidity above, but it needs to reject. It has to reject. That's your sign of weakness. Not as price is above the level. That's a sign of strength. Okay, and you do have this inefficiency over here. Okay, for me, this, ladies and gentlemen, is a no trading zone. No trading zone. Unless you get the SFP from the weekly level, because then I can just practice my trading or execute my trading strategy, swing failure pattern strategy. Okay, so now, this is one trading scenario that I'm currently watching. So you can see from my technical analysis, and remember, I'm just a crazy dude on YouTube sharing with you how I'm approaching the market. And I will keep the community up to date. If I am in front of the chart, if I'm not mistaken, let's see. Just want to check something here. Okay, I'm sure Andy's going to start providing some technical analysis and updates in a moment. Right. That's what I think is setting up New York Falls breakout that high, a lot of liquidations. Yes, I think there's a lot of people, maybe, from a liquidity perspective, we can go and check it out. Let me refresh this. Let me zoom out onto the 15-minute. I just want to go and see where is the liquidity, because, I mean, this CVD, you guys can see it's already building up berry CVD. So even when it gets invalidated, you can see that the bulls are losing steam over here. But I just want to switch on liquidity. So yes, you do have liquidity above that high. You guys can see you have a pocket of liquidity. Let me grab the pen here, the drawing tool. You have you have liquidity. And then a little bit further up, you still have liquidity. So I want to now talk about this one. So we've discussed this one. This is where price can pierce up, reject from the high. Okay. But this one is also very interesting to me. So maybe I get stopped out. Maybe I don't take the trade. I will make a trading decision when price gets there, if it gets the rejection. But this is now another interesting rejection zone. $74,500. Okay. 74,500. It's all the way up here. Now, for me, it would be very rare for a C to extend that high, or for this, more specifically, to be a 1, 2, 3, 4, 5, an extended fifth wave. So I would just count this a little bit differently, but it's the same result. Okay, and I discussed this morning, which I shared this scenario with the community. So if price does continue here to the upside, I would then say, okay, I think the impulse came to an end over there. So that's the first thing I'll change. Impulse came to an end over there. That's your fall. Let's take this out. So basically, you have a 1, 2, 3, 4, 5. And this is now the start of the correction to the upside. Okay. And I would then count this as a WXY. So let me take guys, let me just clean up some of the levels here and just show you what I mean. Okay, there we go. Local WXY. And this is basically the scenario that I'm looking at now. So to keep it simple, I would take a fib from the high to the low. Okay, now that 786 is very close to where that liquidity lies that I've just highlighted. So if it's not going to grab this and fall down, which I'm looking at, okay, for a shorting opportunity, it might go higher. And I think the only way it's going to get higher or go there is in a WXY. So locally, this is what I'm looking at. Okay. You have formed an ABC to the upside, which gives you a W. Okay. This could be an X wave that's either done or it still needs to be done. Okay, and I'll discuss now a longing opportunity as well. And then you want to see an ABC to the upside to complete your Y wave. But you can see it's a three-wave structure. It's a three-wave structure. Okay, where price could make a lower high where that pocket of liquidity is lying and fall down and claim the lows. And this is a trade that can turn into a swing trade. And I have a good feeling this is what Andy is also watching. He's exactly watching the same levels, because this can turn into an epic swing trade based on all the scenarios, the ending diagonal, the WXY. Price could make a lower high and absolutely nuke to the downside. So it's a very interesting zone for me to look for shorts. And sorry that I'm not that person that is just bullish. Okay, sorry that I'm not that person. I sometimes feel like I need to just tell people what they need to know, not what they want to hear. Okay, and I will explain to you now when I will turn bullish. There's something that needs to happen for me to turn bullish. Okay, then I'll be looking for longs. But guys, I can be bearish and bullish in the same day depending on how the structure unfolds. And that's where I keep the community up to date. If you want to be part of the community, you know the deal by now. DM me the word access. There's my Telegram. And I'll send you the instructions to be part of the community. Because that's where we spend most of our time, watching price action as it develops. Okay, that's also where I jumped into the short right over there. Okay, I shared this inside of the community. Also, it was the 50%. So for those of you also that's wondering, even if you throw Elliott wave theory out the window, okay, let me I just want to, sorry guys, I just want to clean up some of the stuff here. Okay, I want to delete that level. Okay, so now this rejection, so when price was here and it fell to the downside, I told everyone if I get stopped out of that short attempt, I'm looking at the 50%. I'm also looking at the 2.618 fib extension. That's how I build confluence. Now you know this white line is the 0.5 fib when you take it from the high to the low of the structure. Also, if you take a fib, a trend-based fib extension from the low to the high to the low of the structure, you have the 2.618. Bang! Confluence, baby. Okay? 50%, 2.618, 1, 2, 3, 4, 5 wave structure to the upside. For me, it just screamed short me. Short me now. And I shorted. Okay, so that's how I build up my confluence. So I didn't need Elliott wave theory to take that short. I had confluence. 2.618, 0.5. You eat up the liquidity for all the early shorters. There was bullish CVD building up as price was falling here to the downside. So there was a lot of signals in terms of, well, you grab the liquidity and you could reject. So that's why I took that trade. Unfortunately, corrective structures, ladies and gentlemen, can still morph into something bigger. Okay? It really can morph into something bigger, and this is why I have this range low over here. You will see I have a range low over here, because what could still happen here is that maybe X is not finished. And if X had to come down, I would just drag everything up. But you can see where I'm looking for a long, because you have a big push and you have a low. And that's what I refer to as the range low strategy. Look at that volume. Okay, and that first low that you make, I call the range low. So what could still happen is, this is now where I'm looking for a long. You could still have a X that grabs the liquidity below this wick. It starts trading back above, and then it goes and it does the ABC to the upside. And you just have a larger WXY, but still a three-wave structure. So as long, for me, as long as price is over here, I'm not interested in any trades. I did highlight the breakout this morning to the community to say that price is breaking out, okay, from this trend. Price is breaking out. It could continue to the upside. I personally, this is my trading, you know, I'm in charge of my own trading. I'm not interested to do anything over here. Some of the scalpers, you know, just trade the range, because I see there was a nice little rejection from the 786 when you take a fib from the high to the low. You know, there's some scalping opportunities. I'm not feeling like scalping. I want to trade the short or the short from the high. Okay, maybe it comes back here to that weekly level at the 0.618. You'll see there's also a nice little confluence at the 0.618. There we go. There's confluence. Weekly level 618. It could definitely reject over there. Maybe this is your 1, 2, 3, 4, 5. Boom, it falls to the downside. So I'm more interested in the shorts. Okay, and if price had to fall down here, I will be interested in that long. So this is my trading plan. You might have your own plan. My plan is, if price gets acceptance back above this low, I'll be interested in a long. If price gets to the 618, I will be interested in a short, because I can still make money, even if it's a small little B wave there to the downside and it does fake out and it's not a 1, 2, 3, 4, 5 where you expect that, and maybe it does the ABC. I can still make money from that move, but I will be very interested in that short. I know it looks like an absolute mess here at the moment. Okay, so that's basically my plan, and as price develops, I will keep the community up to date, because yesterday, okay, my plan, let me clean up this, was the following. Let's switch this off. Let's open up my stuff. No, not that stuff. This was my plan yesterday. I told everyone this can either be a 1 or an A. This is your 2 or your B. Okay, so I was expecting this. A, B, C. C obviously went a lot higher. C went a lot higher. But the directional bias was there. I was looking for longs and I was looking for shorts. I didn't know that the C was going to go that high. But when it did go that high, I was looking for shorts and I'm now in the short. So as price unfolds, I will look for new opportunity based on the current price action. And unfortunately, I can't be on YouTube for 24 hours. That's where, that's why I have the community I can change my mind and update them with new technical analysis based on how price develops. Okay. So now I can actually delete this. I don't need this anymore. But my directional bias is I think there's a chance to go and take out this high. That was my directional bias. Regardless of what happened here, I knew that there was an increased probability to take out the high based on the scenarios that I shared yesterday in the community. Okay, so now maybe before we continue, let me say, look at some comments. Let's maybe do this. Put myself there in the corner. Let's do this. Ching, ching. Oops, just need to share my screen again. Okay, that's better. Let's do this. Okay, cool. I see what you mean. Yes. Right, 24-hour stream coming soon. That would be, I'm not sure if I'll be able to do a 24-hour stream. Okay, harmonic bat on the 15-minute with target at 68K. Harmonics. Are you guys talking about harmonics over here? On the 15-minute? Are you talking about this structure over here? Or are you talking about the larger structure? Okay. I don't see an harmonic here. Didn't retrace enough yet. Okay, you're going to have to, if you are inside of the community and you ask questions here, you can just share your chart in the community and I'll have a look at it. But I don't see an harmonic here, okay? If this pivot went lower, then I see an harmonic. I see an harmonic that can do that, but it didn't do that. Okay, so, I mean, yes, you said 15-minute time frame. I'm just trying to figure out where do you see that harmonic. Okay. Right, let's get back here into the comments. A possible bat. King Trader, I'm not sure if you're inside because I know people have different usernames for YouTube and Telegram and all that. But if you are inside the community, just share your chart and we can all look at it together. Okay, Mr. A Trader, always appreciate you being here. Was that your own liquidation heat map? Yes, this is mine. Okay, this is mine, guys. This little tool here includes everything that I use from a trading perspective. It has CVD. It shows me the bullish and bearish CVD. I can toggle things on and off. I can see, okay, I only want to see Bybit, or I want to see all the liquid or all the heat maps for all the exchanges. I can switch it on and off. I can do some crazy things here. My divergence, I can say all markets. I can just select everything here. It will show me everything. So, and this is something that we've developed in-house. Okay. So this tool will be made available to the community soon, but there will be some requirements in order to access this tool. I will still, myself and Andy will still communicate that. For the last couple of weeks, two weeks, I've been testing it out. Okay, just fixing the bugs, making sure that it works, that it is reliable, and I think we've ironed out most of the kinks already. So it's really great here at the moment. You guys can see it's very small there in the corner, but you can see that it says Mine Pillar. Okay, so it's our own one that we developed. And right, let's go through some more comments, see what the beautiful community is saying. 24-hour stream. Okay, how do we get it? It's better than mine. Lol. Yeah, I will share it. I will share the instructions on how to get access to it very soon. Okay, thank you, dear old. Absolute pleasure. Is it bad to kind of want to go lower so I can buy more spot? No, it's not bad, Mr. Gideon. Not bad at all. I mean, I also want a Bitcoin to go down lower so that I can buy. I still have a lot of dry powder that I want to deploy. So I want Bitcoin to go down lower. But the reason I bought okay, was because of fear and greed. And I also can't resist the opportunity to get things at discount. Okay, since the all-time high, you have to think about this as a pair of sneakers or a shirt that you want to buy. From the all-time high to this low, you're getting Bitcoin at 52% discount. I get interested to buy things at discount. And if it goes down lower, great. Okay, I will take advantage of the discount. But also, fear and greed was at extreme fear when we made this low. So for me, I like to buy when there's extreme fear, especially when fear and greed goes below 10. I like to start accumulating. That's the best time for me to buy, is when the markets are in extreme fear. If it wants to go down lower, well, then I'll buy some more. But I'm not buying when the charts are euphoric. I'm not buying when there's extreme greed in the air. Okay, you will never find me buying here and buying here. You will find me buying here and buying here, which I did because I shared I'm buying here and I'm buying here because there was extreme fear. I like to buy the blood in the street, as Warren Buffett likes to say. Okay, so yes, Gideon, I would like to get Bitcoin at a better discount. Okay. Okay, I love it. Suits my style. Can you discuss the spanner scenario? Oh, yes, the spanner scenario. I showed it, but I didn't discuss it. Let's discuss the spanner scenario, which does look very interesting. Okay, let me put myself back here on the right-hand side. Here's the spanner. I like to call this the spanner scenario, but it's actually a beautiful ABC flat. Okay. This scenario I have discussed over the last 2 to 3 weeks, just to say that, well, you have a WXY in an A wave. Okay. You could form an ABC inside of B, because B has to be a 3-wave structure. And then you go up and you grab all the liquidity above the highs. And this one can go and grab all the liquidity below the lows. And this little spanner scenario is specifically designed to confuse the market. It's specifically designed to grab liquidity and reset the funding rates. And they happen very often on the price of Bitcoin. Okay, so remember all the scenarios that we've discussed to say that this could be the end. Okay, maybe it's the leading diagonal, maybe it's the ending diagonal, maybe it's a WXY that ended over here. It doesn't matter how but this can be also the end of this little B wave. Okay, remember this C wave that is now forming here to the downside has to be an impulsive structure, a 5-wave structure. And so far, it's off to a great start. You have a 1, 2, you need to form a lower high. Your invalidation is claiming the high for this scenario. Not allowed to claim the high. So you form a 1, 2, 3, 4, 5. Has to be a 5-wave structure. Inside of the green box, you want to complete your B wave. Your invalidation is the 1.618 for this scenario. So the minimum target is the 0.9. But I mean, if your wave 1 is already this big, I expect a nice little drop in a 3rd wave here to the downside. So there's a good chance it's going to eat up the lows. But you can just imagine the psychology behind the scenario. When price drops and it takes the low, can you imagine the psychology that's going to play out here? Oh crap, we're going to $30,000. We're going to $25,000. You know, I've seen some of the thumbnails of people saying we're going to 30, 25. Once we lose this low, people are going to think it's game over. It grabs all of the liquidity. So everyone that longed and did not take profits, they get liquidated. They lose all of their cash. They get stopped out, whatever the case might be. Okay. Price finds support in the green box. And it's that disbelief. No, it's just a retest. It's going to retest the scene of the crime. Okay. You have your trend over here. Let me make it thicker so everyone can see it. Okay. It dips below, it's going to retest the scene of the crime and it's going to continue. And it doesn't. It continues to the upside and it grabs all of the liquidity above the highs. And this is basically a normal ABC flat. It's a A, B, C flat, still a three-wave structure, and then you continue to the downside after that C is in. So after this C is in, then you fall. So basically this range can still continue. Okay. I love ABC flats because they create confusion. It looks like price is breaking down, it doesn't. Then you go back up, okay, you grab the liquidity above the highs. I see them play out almost every single day on the smaller time frames. I see them play out. Very, very, very common corrective structures. So how do I plan to trade this structure? Okay, because last week I highlighted to everyone, this is a rejection zone. There's your invalidation. And it rejected beautifully inside of the B zone over there. Okay, so the same thing I will do. If price falls here, I will keep an eye on a swing failure from these lines. Okay, the best approach is usually you wait for price to get acceptance back above the low. So whatever price does here at the bottom, okay, you wait for strength. You wait for strength so that you know where to put your stop loss. Or for me, so that I know where to put my stop loss. Because it could get aggressive here to the upside. And I can just imagine the confusion. Why did we not break down? Now we back up here. And you know, you can just imagine once price gets acceptance back inside this trend, everyone's going to call it for $85,000, $90,000, $100,000. You know, your thumbnails are going to change green again. Bull market is back. We had a fake out. Okay. And then it grabs the liquidity and then it falls back to the downside. So it's a beautiful market psychology scenario. Okay. But in the short term, you still expect price to continue to the downside. And this is why I'm still so interested in a short. Okay. You have a 5-wave move. 5-wave move, however you want to count that. 3-wave corrective structure, interested in shorts to join the big move to the downside. The 3rd wave or the C wave, however, you know, they are usually the best waves to trade. So this is what I call the spanner scenario. This is going to throw a spanner in the works. This is going to confuse a lot of traders, especially from a swing perspective. This is going to confuse a lot of people. Do I long or do I short? I don't know what to do here. Oh crap, I missed the whole pump. What do I do now? Okay. And I can imagine, once you see a 5-wave structure to the upside and you correct or you fall down, okay, it's going to be a lot of people longing in this zone and then it just continues. But I mean, there's a lot of price action that still needs to play out before I can give this scenario higher probability. Okay, once we get a leg down, if we get an aggressive leg here to the downside with increasing selling pressure, I will start giving the scenario higher probability. But technically, there's nothing wrong with this scenario. It's a beautiful scenario. You have a W, X, Y in an ABC in a B wave. Beautiful. It balances. There's no issues that I'm like, oh, I don't like this or this. It's a beautiful scenario. Okay, so there you go. Sorry, I meant to discuss this scenario a lot sooner. I forgot about it, but thanks for highlighting it. I appreciate it. Okay, so Mr. Anthony, there you go, right? There's your spanner. Beautiful spanner scenario, but in that scenario, you expect price to make a lower high. The high is either in or it's going to do that ABC here to the upside where I'm going to look for that short. But you expect a lower high for price to break the trend. You want to see this momentum lost. Okay, that's going to scare a lot of people because as soon as you break that trend, okay, I'm going to be looking for shorts here, guys. I don't want to be looking for shorts here. Can you guys see? I'm trying to find the best shorting opportunity because my invalidation has to go above the high. Or if I can get into an SFP, I can get a smaller invalidation at the SFP line. But I don't want to look for shorts here. You know, I want to make money when we get there. I want to already be in profits when we get there. Okay, more locally, for me, remember what I said, guys, more locally, what I would see to change probabilities for the bulls. Because for the moment, I'm still focused on corrective structures. And make no mistake, I can play longs and shorts. So remember what I said, I'm looking for a long over here. As long as price is below this area, I'm not interested in a long. Even if it bounces, I don't care. I have to follow my rules from a trading perspective. If price falls down here and I see a sign of strength above this pivot, I will attempt a long. If not, as long as price is down here, I'm not interested. Okay, maybe I'll be interested in this zone somewhere for a nice little scalp long or something like that. I'll analyze it if price gets there. Okay, so for now, let me put on the local scenario. Here we go. And I want to switch off the ABC. Let's do this. Okay, so for the bulls, this is what you want to see. You have formed a 1, 2, okay, and 3, 4, 5. Once you have a 5-wave structure, obviously for me, that becomes the shorting opportunity. But I'm also keeping in mind, once you have a 5-wave structure to the upside, if the move down is corrective, overlapping, you know, it's a confusing structure, it's overlapping each other, you're struggling to count impulses in the structure, you're starting to build bullish CVD against the pivots as it's falling, okay, that could be an epic longing opportunity that continues to the upside. But I need to see a 5-wave structure. And preferably this is 4. This is the end of 4. Because this is getting very... So if you're counting this as an A, a B, a C, okay, preferably 4 is not going to move there. Then I will look at the structure as a WXY, which can still... It's the same result at the end of the day. But it's just, you know, this 4th wave is becoming very long compared to wave 2 over here. So for me, basically, guys, for me to switch bullish, if price comes up here, grabs the high, I'm looking for a short. And based on the retracement, and I'll keep everyone up to date in the community, I will be looking for a long. Because you could form your 1, 2, 3, or A, B, C. This could also become an A. And that's your B. But it's the 3rd or the C wave for me that are the best waves to trade. So there's a longing opportunity, shorting opportunity. If price comes down, okay, still longing opportunity from the range low. So it actually doesn't matter how I count the structure. My trading plan is the same. I'm looking for the same longs and I'm looking for the same shorts. And for me, that's the beauty about Elliott wave theory. When I start counting the structures and they all give me directional bias for longing and shorting opportunities, okay, that's where the planets for me starts aligning. If we get a nasty surprise like we did yesterday, well, I will wait for price to slow down and give me a range so that I can make a trading decision, like the short that I jumped into there. Okay, sometimes you just have to, you know, let price action show you the way. I might long when we close a candle above the hourly 200 EMA. Well, you guys like your moving averages. Okay, I'm not even going to try and switch on my moving average. I know I'm going to stuff it up. I actually need to jump in a call with someone that specialize in moving averages and let them just help me with the settings and explain it to me. I used to do it many years ago. I used to trade with moving averages, but I forgot, guys. I mean, it's just not my cup of tea. I didn't like the strategy. I struggled with the strategy. I needed to find something that fits my personality. Okay, and I found that when I left moving averages, my trading became better. But you might be a moving average person. So I'm not saying there's something wrong with moving averages. I know that there are very successful traders that only use moving averages. It's not my style. And I'm sharing with you how I approach the markets. And I'm not saying, you know, I'm not saying there's anything wrong with it at all. Dewald, is there a way to add a limited stop loss in case price moves very quickly not to overshoot my stop loss? You could have a No, I don't know. Sorry, I'm gonna have to do some digging in there. I don't know. It's either you could have a stop loss that only pays out a portion. Okay, you can have two stop losses, for example. The one kicks out 50% of your capital, and the other one kicks out the remaining of the first. So you can have stop losses where you only pay out a portion of the money if you're inside of the trade. Okay, so for example, I know you can do this on most exchanges. Okay, but I'm not sure if this is going to help you in any way. So you could have a stop loss there and you're in a short, and you could have another stop loss a little bit higher. Okay, and you could say this stop loss is going to pay out 50 or 20 or whatever percentage of the position, and then this stop loss is going to close the entire position. So you can have stop losses that pays out or exits your cash with specific percentages. So I'm not sure how this is going to help you from a trading perspective, but I mean, if you're developing something that makes sense to you, by all means. Okay. Using moving averages, you will always be delayed. Yes, because it's a lagging indicator. That's why I don't like to trade with stop losses. This is why I use CVD, because CVD is a real-time indicator. It shows me in real time what the market makers and retail is doing. This is why I love CVD. It's the only indicator that I use. You guys don't see any indicators on my chart. Yes, I sometimes bring up RSI and stochastic RSI, but I don't use it to trade with. Okay, I don't trade with those indicators. It's just interesting to look at from time to time. Especially when I know the fifth wave is done, I want to see that divergence. I'm like, okay, it's another piece of the puzzle. But to your point, moving averages are most indicators on TradingView are lagging. They use data that is already formed to make a trend, or to, like RSI, moving averages. There's many indicators that are lagging indicators. Devold, I have sent a chart on the chart talk only. Can you have a look at it? Yes, let's do that. Let me open up a blank screen, bring my community tab here. There we go. And that's, I suppose, the benefit of being inside of the community is that you can share your analysis with me and I can have a look at it. Chart talk only. Here we go. Devold, do you think this scenario, is it valid? Let's look at this. I just want to make myself a little bit smaller so everyone can see. Okay, and by all means, guys, if you're on the community, you want me to look at a chart, okay, I'm a picture person. When someone types out comments, I sometimes get lost in the comments. But when I see something in front of me, then it makes more sense. Okay, W, yeah, that's a W. WX, W, X, Y in the X, okay. Then you have your A, B, C, D, E, okay. A, B, C, yeah. This one, my friend, does make sense. It does make sense. But you need a fight, and this is why I'm saying this. You can still go to 80k, definitely from here. The scenario does make sense. I just need to go and recount it by myself as well, just to make sure. Okay, but that's what the local structure will determine for me over here. Is that if, okay, you have to remember, if this turns out to be a 5-wave structure, and you form a corrective structure, you can continue up and take out the high, which will give you your Y wave to the upside. But it's the local structure that will show me if it can get there. For the moment, this is a 3-wave structure. So the bears are still in control. This is, for the moment, a 3-wave structure. So if it makes one more high and it rejects in a corrective way, in a corrective fashion, and it breaks out and you see overlap, there's a chance you can have your 1, your 2, your 3, your 4, your 5. So it's the local, and this is what I'm saying. So it doesn't really matter how you count the structure, okay? It doesn't matter how you count the structure. It's the local structure that will give me the trading opportunity. So if I see the 1, 2, 3, 4, 5 corrective structure overlap, it breaks the trend, okay? It could be the 3, 4, 5 to the upside. So that's why I said I'm looking for the long. Okay, I'm looking for the short, because this could also be the end. Okay, you have your A, B, C, and it falls. So I want to be in that short, because you don't know what's going to happen. No one knows. No one knows. But I want to be in that short so that I'm positioned for if it does. I want to be in that long to be positioned for if it does this. So thanks for sharing that. That's actually a great scenario. I need to go and count it in detail to see if it's perfectly valid. It's just going to take me too much time, because I like to do it on my own chart, look at the levels, the fib pools, make sure that it's, nothing inside the structures got invalidated. But from a high level, that what I can spot here is that, yes, this can still happen. Your X is very, just the X is very long. Also, W is very short compared to your Y. But it's not invalidated. Definitely a scenario that could play out, which basically aligns with that little consolidation area. Can you guys see my mouse? Yes. Okay, rejection area. Now I can tell you now, if price got there to the upside, I still have my trading plan there to the upside. That consolidation area, grab the liquidity above those highs, okay, which is basically this. Make no mistake, if I do, let's say I missed the long trade, or I do take it, it doesn't really matter, okay. If price, and I have been talking about this zone for so long, if price gets here, I don't care what structure played out to get it there. I'm looking for a short. That could be an epic swing short there to the downside. So it doesn't matter if you're right or wrong, that you make money. I'm going to make money if price gets there. Okay, I'm either going to be positioned in the long, maybe there, if I'm not sleeping, whatever the case might be. And if I miss the long, I'm going to be interested in a short over there. Okay, you have that consolidation area that can provide resistance. Also, what I want to check quickly is based on your scenario. So you're basically placing X, okay, A, B, C, D, E in a Y wave. A, B, C, D. Okay, I see what you did over there. It's a triangle basically. And then 3 wave A, you have to have a B flat. Yeah, I need to dissect that scenario in a little bit more detail. It's just going to take me too long now. So after the live stream, I'll go and check your scenario and see if it's got any invalidations. And but regardless, if price moves up, I'm interested in a short. I'm also interested in, I'm hoping to catch that long as well, based on the analysis that I've just shared. So it doesn't really change anything for me, just it gives me a better shorting opportunity. Okay. And a potential nice little long opportunity to the upside. Okay. You can count also your spanner scenario. With that scenario, it created a stunning flat C, taking out the low. Yeah, I love that spanner scenario, I must say. I really love that spanner scenario, and I'm paying attention to that spanner scenario. And guys, if you want to be part of the community where I do the updates, in case you don't know yet, because I do know there's a lot of people in the stream joining on a daily basis, DM me the word access. There's my Telegram, and I'll send you the instructions on how to join the community. Okay. Thank you so much for joining the live stream. I have unfortunately run out of time. I need to go somewhere actually. So have yourselves an amazing trading day. Thanks for joining the stream. Smash up that like button. If you feel like you want to, you can leave a comment after the live stream. It really helps with the YouTube algorithm. Have yourselves an amazing day. Until the next one. Cheers for now.